Testing 1, 2. Oh, can you hear me now? Wow. So I'm not even on the screen yet. I wondered if my mic would come through that way. Okay, so evidently you guys can hear my mic. Normally I have it muted. Let me shut the music off here. So normally I have my mic muted until I actually come on. And I wasn't sure if you guys can hear that or not. I have to be careful what I say, shouldn't I? So anyways, normally I'll have it muted, but I wanted to see if it would actually come on while I was off screen and just that timer up. Okay, so this first video, what I'm going to go over is Nasdaq. And this, of course, is going live on YouTube, but it will be on there as a recording that you can rewatch. I have my trades on the charts on this one, and then I'm going to go over platinum later. So you'll be able to see, I'm not doing it in replay. I just have the charts up, but I do have the market orders on. I don't always like keeping them on my chart because I think it junks up my chart. So I don't have them on while I trade during the day at all, ever. But I'm okay with going in and, turning that back on and showing you guys how the trade went down. So, right now we're covering Nasdaq, and then I'm going to come back in. I'll probably take maybe a 15, 20-minute break, come back in and do platinum later. Platinum, I actually scaled in. So platinum, platinum will be an interesting one for you guys to watch because platinum, I went in light because of where I went in. So I went in lightly. I added to my position twice, and then I started closing out partial, and then when it pulled back, I actually added in again. So it has several elements to it, as well as this Nasdaq trade. So on the Nasdaq trade, you're actually going to see the same thing, except I went in heavy because it was already in a downward motion and had broke some support levels. So that being said, I went in with my usual contracts on it, what's usual now on this larger account. And typically you'll see me go in with 20. I rarely go in heavier than 20. I have on a couple trades, but 20 is normally it's kind of my limit as far as what my brain wants me to put on, if that makes sense. I got to turn my fan on. So you'll hit blocks in trading, and I don't care if you're trading and you're risking $100 or you'll hit these mental blocks. It's, my first trading days, I didn't even want to risk $200. But I know that in order to make money, you got to put up some money, in anything in life. I don't care if you want to sell on eBay. You have to buy something first and then go put it up on eBay. If you don't buy it and you just take pictures of it in the store and go list on eBay, and then someone buys it from you and you go back to the store to get it, it might be gone. So you have to put up the money up front. So my mental blocks were like $400 or $200, then $400, then I got up to where $1,000. It's like, I did not want to risk more than $1,000. You guys have heard me talk about this before. It's something every trader will have a problem with, come against. I mean, it's just something you have to kind of work your way through. And then it gets to be where, well, hey, I'm only risking $2,000 a trade. Then it's, I'm only risking $5,000 a trade, and, 10,000. So the numbers get bigger as your account grows. And the only way your account grows, of course, is to leave money in. So unfortunately, if you're doing prop trading and you pull out all your profits, or if you're trading live, it doesn't matter, and you pull out all your profits, which is where I was in the beginning years ago. I had to have money to survive, to pay bills. So what I made per month, I had to withdraw. And it was actually less than what I needed when I started, and I wasn't sure if I was going to make it. So eventually it got to the point where I was making what I needed per month. And even then, so above that, once I started doing runners, and I was able to grow my account. And by growing the account, then if you want to trade exponentially, then as your account grows, then you're adding more contracts to your trade. So, and the larger, your account grows, the more you trade. So let's get into it. I don't want to take up a ton of your time. I'm going to try and keep it as short as I can. I am just going over the one trade, and that's to kind of keep it short. And then, like I said, I'll come back in and do the other one here in a little bit. So let me click this off, and I think that's the right one. Okay. All right. So now you'll see Nasdaq. And again, I'm just going to go over. I'm not doing a replay. Replay takes a while to do in replay. So I don't mind showing you guys replays. And it would be the same thing. I would leave my trade markers on. Let me switch over to the arrow. So I would leave the trade executions on and just go through in replay mode. And as the trade executions come up, then I would close out partial or re-entry. Okay. Let me know, because for some reason my platform went back to my old chart where I have the border. Now I love this chart coloring. I've had my chart coloring set this way since like 2006 when I switched away from the basic. This is the way it's been. So I'm really used to it. I like it. But as I look over at StreamYard and look at what you guys are looking at, I'm not so sure it looks the best. So I'm willing to change it. I know it doesn't look as good as Top Step. So when I've shown some videos on Top Step, they just have the two colors. So if this kind of looks, because to me, as I'm looking over at what you guys might be looking at, it might look kind of blurry with the borders being a different shade. So just let me know. I might change it and try it the other way and see what you guys like the best. Okay. So here's the trade. So this was Nasdaq yesterday. Here's my entry. If you look down at the bottom of the screen, it was about, almost 9 o'clock. So this was before the U.S. stock market opened. Okay. So the Forex market opens at 8, a.m. So this is before I took it before the U.S. stock market opened. Okay. So that was my entry, and I went in with 20 short. And it popped down. So it made an extension, pulled back. At the point it made that extension, I'm drawing a line. These aren't the original lines I had on the chart. I cleared everything back off. So once it extended down and pulled back, then I'm like, okay, that's a low. I draw the line. That's the line I want to cross my screen. When it extends past that, I'm going to close profit. Now, Nasdaq's wicked, and I don't always trade it. You guys know that. I do not trade this every day. So this I'll tend to trade based off profit on other instruments. So like, gold, oil, normally my go-tos tend to be gold and oil. Okay, those two. And always for the currency pairs. So always currency pairs off currency pair news. Okay, off their releases. I will always trade. I'll never give that up. Then it comes to gold and oil, and then platinum's kind of on or off. It has to be a decent setup. Okay. So what I do, and you guys know, I kind of scan in the morning. So I'll come scan in the morning, flip everything back on a 4-hour time frame, take a glance, see what levels we've broken, what levels we've gone through. Have we gone through any 4-hour zones? Are we bouncing off any 4-hour zones? What's my overall view? I'll glance at the 4-hour, drop to a 1, and then I may or may not drop to a 15. You don't always have to do that. If I see that, Nasdaq pulls down here and there's a 4-hour zone down here, and I'm looking on a 4-hour chart, I could drop to a 3 to look for an entry. Okay. I don't have to drop to a 1. So it just depends, but I kind of scan through, pick what I want to trade, what looks good to me. And every trader is going to be different. That's part of why I don't trade one. Now, when I started, I only trade the euro dollar. That was it. 6 months into it, of 6 months consistent, decent profit, that's when I chose to look at another currency pair. Back then, it was all just currencies. Okay. And that was it. My phone's going ballistic. See if I can shut all that off. So I don't recommend looking at a lot to start. I recommend staying focused, looking at one instrument. And once you successfully can handle one and trade one, well, then now it's time you could look at another. You don't have to. You can make a living on one. However, what I've found is I might come, back then even, if I came to the chart and looked at the euro. So let's say you pick the Nasdaq and you just want to focus on that, just want to trade Nasdaq. But you come to the chart tomorrow morning and it looks horrible. The swings look bad. It looks rough. And it looks like, I don't know, guys, a football game that's going on and the players are moving across the field and you just want to run out there and play with them. That would be stupid. I wouldn't even run out and play with them. And I'm 6'2". So, but that's what if it looks like that to you, a rugby game or football game that's already going on, and I know I shut that off, then why would you want to take part in that? Why would you want to run out and just jump in the game? Okay. I wouldn't. It's risky. So why would you do that? A highway. You're wanting to cross a highway and you want to cross the highway at 3 a.m. when there's no traffic, or when you wake up in the morning that you come to the chart or you go to the side of the highway and you decide you want to jump in. It's the same thing. At 8 a.m. is a busy time on the highway. Everybody's going back and forth to work or going to work. So why would you want to cross the highway at that time? Why would you want to jump in? I'm just trying to kind of bring it to reality. It's the same in trading. If you come and look at your chart, your instrument of choice that you want to trade, and it looks absolutely a mess, why try and jump in on that? Okay. If you're having a hard time deciding which way it's even going, I don't even know what this thing's up to. Okay. Then do you want to sit out the whole day? Well, that was me. I didn't want to sit out the whole day just because I came to my computer. And so for that 6-month time, I got consistent, but there was days I came to the computer and it didn't look the greatest. And I'd sit out and I'd sit out and I might sit out and I might sit out all day. Well, I didn't like that because I was trying to make a living. I needed a paycheck at the end of every month just to pay our bills. Okay. You guys, most of you know my story. So I'm not going to go over the whole thing. So if you come to the chart, so what I'm trying to get at is it's okay to look at a couple instruments if you're trying to do something like that. I would not, if you're starting out, try and trade 3 or 4 instruments. So don't do what I do. Yesterday I was trading 4 different things. I think that's all I traded was the 4 items, and they're all posted in the Discord. But and we're going to go over 2 today, one now, and then I'll do the other later. Today I took a short in Bitcoin and a short in gold, and I was late in the game. And the Bitcoin I posted out to Discord, but I jumped in because it had pulled back up. It went through a 4-hour zone, pulled back up to test the 4-hour zone, broke the retracement line, red candle entry, was in. So a good setup. And then I went on in with 20 contracts, and then I closed out 15 when it retested a low, thinking, well, it's kind of hesitant here and it might not push lower. So I went ahead and I didn't want to push my luck, closed out 15 and left 5 on. And I left my stop on that. So I don't remember where all my placement was on my stops on this trade. I did not mark them. The platinum one I marked as I traded it. It takes a lot, not really a lot of time, I guess, but to come in and take your flags and come in and mark where your original stop was and whatnot, it just takes extra time. And when I'm trading 4 different instruments, it's kind of a lot of extra, I think, to mark them all up. So I only marked the platinum up. You'll see where I have when I added some to my position, it moved. All right, so let's get on with Nasdaq. So I took 20 short, it pulled down, and then when it pulled back up, I said, ooh, okay, low, mark that low. That's what we want to break. So originally, this low was more like this. It wasn't all the way across. Let me turn the magnet off here. Yeah, let me just take that one off. Bear with me. So originally, it was more like that. You guys know I draw my lines all the way across. They're dotted. Normally, they're not colored. So they're more like, and that's a trend line. It's this one, sorry. That's my usual support and resistance lines, okay? And then I'll come in and mark it like that. That's normally what I do when I mark a low. It's normally that horizontal ray, and then I just mark it SR level. You don't have to. But that's what I put on the chart originally, okay? There's a reason why I have it drawn like this. You'll see here in a minute. So again, that would be the line that I would look to have Nasdaq break, and then we want an extension. I always try and get out at an extension, not a pullback. A pullback is a time to add to your position, okay, when it pulls back, because it gives you better pricing. So let's say I went in light here with 5 and it pulled down. Well, when it pulled back, okay, and I would have a line here. So I would have had one of these here like that. So, and it don't matter. It would have been more like that off that wick, 3-minute wick. So let's say I got in where I got in, and I got in light with 5. Well, it pushed, it extended, it pulled back. It pulled back to where? It pulled back to previous support. And then it gave a red candle. So I would add 5 more in here. This is if I was scaling in. So isn't that a better price to get in at on my 5 additional contracts than adding it down here? Of course it is. So it's always better to add to your position if you're going to scale in or put another trade on, however you want to look at it, always better to add on a pullback. Okay. Get out of your position or scale out or close partials at an extension move. Okay. And that's what I did. So I didn't wait for this candle to close. You'll see where it closed. It closed up here. When this candle pushed down here, I closed out 15. I closed out part of that trade and left 5 runners on. Now you look at this, hindsight, and said, wow, Butch, why didn't you wait till it went way down here and then closed out your 15? Because I didn't know it was going to go there. I had no idea it was going to go down here. Okay, so we don't know where it's or how far it's going to move. So the best thing we can do is manage the trade according to our rules that we set up. Well, my rules are that because I need to make a certain amount of money each day, and I know I'm going way over that now in the one large account. Now I've got smaller accounts I trade in too that I can cash out on because the big one I can't. The big one's in an IRA, and I'm just not that old yet. So the smaller accounts, it's mirrored. So the accounts are mirrored off of each other is what they are. They're linked together, and you guys can do that. And you can do it depending on your broker. You got to find out, but you can link a IRA. Guys, I think it's phenomenal. I learned that back in 2006. I went to a Forex thing up in Tampa. That's when I found it was through Equity Trust. That's when I found out that I could take through Equity Trust and I can open up a IRA account and have it linked to my Forex.com trading account. Because back then, that's the only broker I had. But I found out I could link the two together. So once you become successful in your day trading account, I do recommend doing something like that. And depending on what money you throw in, you can have it trade according to account size. So one of my accounts is really, it's grown a lot over the years. And it's that one, but it is linked to another account. So I can sit down there and trade on the other account on a smaller scale and just know that on the bigger account, it's growing. Okay. And that's to cash out later to live on. So we don't know how far it's going to fall. We have to trade according to the rules that we set up. They should be wrote down. I don't care if you got a piece of paper on. Guys, I got papers all. If you saw my desk, you'd wonder what in the world. I've seen screenshots of other people's desks that trade. They are clean as anything. And I could brush all this stuff off and take a picture. There's a lot to brush off. I've got papers everywhere. So, it is what it is. But I don't care if it's paper on your desk, something taped to your screen. I recommend having your notes, having your criteria set up. So anyways, it pushed down. I closed 15. Okay. Then you'll see when it pushed deeper. Okay. When it started pulling back here, I closed another 3 because I thought, okay, it is going to pull back. It already started. So with that green candle in here, I thought, okay, I'm going to close out 3. We want to close out partials and lock in the most money we can. The most money. Here, I didn't know if that was all it was going to move or not. According to my plan, my rules, I close out 3/4. 15 is 3/4 of 20. If you hadn't noticed that. And you guys have heard me, I'm closing out 3/4. I'm closing out 3/4. So I've adjusted my plan. Does anyone remember what my plan was months ago, what I was doing? I was putting on 10, closing out 8. 10 and 8, 10 and 8, 10 and 8. And that was on a different account. And I still have that account and they're all linked, but it's 10 and 8 in that. Well, now it's not. So now it's 10 and 7 in that account. So this one, it's 20 and 15. Okay. So 20 and 15, 15's closing 3/4. So again, we want to capture as much as we can. We never know where the bottom is. And I'm not going to try and predict the bottom, but I noticed green candle. We're getting a pullback. Where could we pull back? Well, as I look at the chart, I'd say we could pull back to here, these wicks, but they're wicks on a 3-minute time frame. So a little bit of indecision. My target pullback area was here. This low, this swing low. After all, it came down, hit it, pulled back, kind of attempted again, pulled back, and then boom, shot through. So that was my target. Pull back to that. Okay, so if I could close out 3 here and put the 3 back on when it pulls back, does that make sense? Okay. Now, I never just put the same 3 back on, but does that make sense? That's what I'm trying to get a point. So if I close 3 here and it pulls back and I put 3 back on and then it moves back down and I could close 3 again and it pulls back and I put 3 back on and it comes down. Does that make sense? It should. I'm closing out 3 at an extended price, profit. It pulls back, gives me a better entry price to put 3 back on. And then it pulls back down, extension. I close the same 3 back out and I might leave a runner on. So with me, you guys know I'll add back into my position. I look at it as a total separate trade, but you don't have to. So we put on 20, we closed 15, we closed another 3. I knew it was pulling back. After I closed the 3, we had more candles. I'm like, okay, definitely pulling back. After these 2 candles, I'm like, okay, it's definitely pulling back. Is it going to go past these wicks? Is it going to hit that blue? So, and this is why I want to go over this today and show you guys this right here, that little reentry. So why did I put on 28? I put on 20 here, closed 15, closed 3. I had 2 left. That's why I put 28 on, to put me to an even 30. I'm using profit that I locked in to scale in, add more. Okay? Has nothing to do with being greedy. We're just trying to get more. So I put 28 on to add to the 2. If you're looking at it as one trade, to now have 30. I like to look at it as I still have a two contract runner. And if I call them lots, guys, it's because so many years in Forex, and I'm trying to call them contracts, but I keep saying lots. So I had 2 contracts still on, adding 28 to that. Why did I add here? I added here because I thought, okay, it pretty much hit that. It's right there. It tested that level, correct? Yeah. What didn't I do? Does anybody know what I did not do here? I know you guys know. As you look at the rest of the move, I didn't draw a retracement line. I jumped the gun. I'll admit it. 3-minute candle, hadn't even closed. It was up. And I thought, boom, I'm in. I'm in because it's there at that price. I'm in. Continuation. We're going to continue short. I'm jumping in. Well, I didn't draw my retracement line. Okay. Had I drawn a retracement line on the way up, if you guys, and I want you guys to start noticing this, I will draw the retracement line. But in trading, we'll have our lines on our chart. But it is ideal if you can see them without drawing them. If I draw a trade line up this move, I think most of you can see that it broke that over in here, tested the back side of it, and then it turned. Okay. So I'll draw one up that move and just extend it like that. So there's the line I should have had on the retracement up. I was trading multiple instruments. Remember, So in the heat of the moment, trading multiple instruments, you may forget to do something. I knew it was retracing. I saw it pull back to that. I had this line on, it was all the way across the screen, but I had that line on and it was down. I turned the magnet off, but it was, down there. That's where it was. So it pulled back. I'm like, bam, I'm in. All right. So was it a mistake? Well, as you look what happened, no, it ended up not being. Did I jump the gun? 100%. Did I sit negative on the 28? Yes, I did. So on the new 28 I added, I was in the negative on this. Where was my stop? My stop was above my entry, original entry. My stop was way up over here. Now I'd already locked in enough profit to ride the negative, and you just can't freak out on that new trade. And if you look at it overall, again, locked in capital can help you sit through a pullback like this, okay? Because I've already locked in capital here. So that helps you kind of sit through this and not get that upset stomach, the headaches that are associated and come with trading and watching your trade go in the negative. Do I care about that? Sure. I don't ever want to see it go pull back. Whose fault is it that I had to sit through that? Oh, it's 100% mine because I jumped in right there. That's 100% my bad. But again, locked in profits will help you ride the negative. So it basically pulled back up. And if you look where it turned, it pretty much turned right there around the high where I got in before. Okay. When it does that, you have a line across here. It's really up to you to get back in. You can get in on one of these candles short. I was trading with the already downtrend. Okay. So if you're waiting on a trend line to break, it broke. Wait on the test to the backside of the trend line and some other support or resistance level. If it's near there, we had that red candle. That'd have been any one of these red candles would have been one to get in on. Or you wait for something like this where it breaks back down. You guys have heard me say it's rounding over. It starts rounding over. We know it's due for a potential drop. Okay. And you'll see a lot of times where they kind of gradually round over. They don't just always do this right here where they drop down and boom, turn, drop up or rise up, boom, turn, drop down, bam, turn. More like this sometimes where they just kind of, you'll see them where they round over. It's one side of the market taking over from the other side of the market for a little while. Okay. So any one of those would have been a better entry. If you look at getting in, even on this candle here, okay, breaking back below again, because this is a support and resistance level, that line right there. So that's our support and resistance level. So again, off of here. So again, it broke back through that support and resistance level. Bam, you can get in. Okay, there's multiple reasons to get in on that candle. There's a few less here. What's the less reasons to get in here? I mean, these are all red. So it retraced. We're in a downward trend, so we're only going to short. So it pulls back up. Broke trend line. Do we get in right then? You can go in light. You got to go in light if you get in on a trend line break. Because what happens maybe 70% of the time, 60, 70% of the time, it pulls back to test the backside of that trend line and find some other reason to turn, which would have been support and resistance. And then, so there's more reasons to get in. Break a trend line, downward trend, 50%. Break a trend line, 10%. Pull back, 10%. What are we at? 70. Red candle. That's like an 80. If you wait over here, you're at 90. You're actually at 100 because it broke back through support and resistance level. So we got 50% for breaking a trend line, 10% for the retracement, pullback, and then we have a turn at support or resistance, old support, resistance, turn there, broke back down through this support resistance level in a red candle entry. So that would have been an actual 100 or 100% $100 candle. That would have been a 100% candle for that entry. So if I would have waited and not thought, I'm nailing the top of this thing, like that right there is saying, okay, it went up and it just pulled back to that price point. Boom, that's all it's going to go. And I don't ever say I'm trying to predict the top, but I just jumped in because it was a good price to get in. And where it went, I could say, yeah, I got in at a decent price. Could I have got in at a better price? Any one of these candles. But even here, waiting for this 100% entry, that price right there is a better entry price than I had over here. That price right there, when it pulled down, you could have closed partial. And here's something you got. This is something you guys have to decide on your own. Are you a break-even trader? How do you manage your stop? Hopefully every one of you that are watching has a rule to how you manage your trade. Some people close partial when it extends and then move your stop to break even. This is a perfect trade to look at and decide if that's you. And if you've been doing that, that's fine. I don't like pulling my stops. I didn't over here. With my two runners that were left on, my stop was way up here. When I put these 28 on, my stop was where the stop was for here, well above this. Okay. If I would have moved like this trade right here, this entry, if I would have got in and moved my stop to break even, where would those two lots have been? Over here, I'd have been stopped out. And then it just kept going. This is yesterday's trade. I'm in it today. So those two contracts, I'm still positive on them and a lot. So that's what I look at. If I would have moved my stop to break even, I would have got stopped out only to miss out on the runner. I have not taken but 2 trades today. And I'm already in Nasdaq, Platinum. The 2 trades are Bitcoin this morning and gold. That's it. Because I had other trades on. And I took those late. Because when you get runners, all you have to do is manage the runners. Okay. You don't have to keep getting it. So as I show you this, as you think about your own trading, think, okay, I see how that's a good 100% entry. If I would have taken that, great. It pulled down, I would have closed partial, great. And I don't care if it's 3 contracts, you close 2. If you move your stop to break even, you got stopped out here. And you guys know what it's done over the last 24 hours. It's dropped. So if you are a break-even trader, that's fine. Your plan is to get in on a good entry, close partial, pull your stop to break even. You got stopped out over here. You're trying to get back in, trying to get back in. You have to pick another trade. So you're trying to look for those. If you would have drawn let's just do it. So if you would have got stopped out, okay, so you got in here, it popped down, you closed partial. Let's just say you put 3 micros on. It goes down, you close out 2, you move your stop to break even. It pulls back, you're stopped out. No loss against your gains. Perfect. No loss against your gains. Perfect. But now you got to get back in. So now you have a retracement line you draw. That's a red candle, looks beautiful. We know what it's done, but that's not your entry. You can't say I would have taken that. Okay, you're waiting on trend line break. So are you waiting on trend line break and retest the retracement line? If you are, there's your retracement line break. There's your retest, your pullback. Okay, and then it turns at resistance. You're going to get in on one of those candles. And if you even drew a retracement line here, there's several chances to get back in. So there's several to get back in. But I want to just show you the two different types of trades. You're getting in on one of these red candles. You're short and it goes down, you're closing partial. You move your stop to break even, you almost get stopped out here. If you would have got in here on this red candle, yes, you would have got stopped out. So it's okay to do that. That's what I used to do a lot of. And this has to do with your tolerance to risk. Because if you get in on these and you short and you pull your stop to break even, why do you do that? Well, you do that so you're not going to lose anything against your gains. You know, it goes down, you close partial, move your stop to break even, it pulls back, you get stopped out. Yay, no loss against gains. That's fine. How much did you lock in? You locked in your 100 or 200 or 300 or 500 per day, whatever your goal is. Okay, so you've locked in, you've done your job, you've done your daily job. That's what this is, guys. It's a career, and whatever you want to call it. It's your day job, it's your trading career. You know, it's a job to sit and trade. I mean, this is not trading like I'm going to buy some Tesla stock. I'm just going to buy it today and I'll check on it in January. I mean, it's not the same. This is more like a job. You're in and out and you're looking for entries. So that's the person that pulls to break even. I mentioned earlier this week, I think it was Monday in Discord, that I would like to challenge you guys to have a runner on to see if that runner could run all week. And I know it's hard because things don't always run. So I'd say it's somewhere between 60 and 70% maybe that things tend to run. So with that being said, a lot of your trades, a lot of you guys have seen, I've showed you my trade stats where I've had, you know, not just the winners, but the losers. Okay. The losers on that, because the trading platform the broker splits the trades. So when I put on 20 here, that's one trade. When I closed 15 here, guess what? That shows as a profit. That's a winning trade. If it would have came back and stopped me out, my loss been up here, my stop loss, that would have been a losing trade. It shows up in your platform as two separate trades. So normally for me, it's my runners that are losers because it pulls back, because I give them room. Okay. Even on this one, if you look where I got in, if I would have pulled my stop to break even and it pulled back and hit that, which it did pull back and hit that, that would have been a zero loss against a gain. But if it would have went on up, I would have had a loser. Okay. So that's something to keep in line or in mind as you look at your own trading stats, as you look in your account and show your history. When you look at your positive and negative trades, keep in mind where some of those negative trades, some of them are going to be you got in the wrong direction. You just got in, it turned around, stopped out. But some of those are going to be if you leave your stop out, okay, and it pulls back to stop you out on your runners, that is going to look like a losing trade in your platform. So keep that in mind. That's what I know, that most of the ones I'm stopped out on are not because I picked the wrong direction. It's because I gave it room to breathe. I left my stop on my runners out there where my original entry was, or for whatever reason, I leave them above the highs and it pulls back and stops me out. That's going to show as a loss. Okay. So keep that in mind. So I do challenge everybody, no matter what size account you're on. And I know it's harder when you're on a small account and you're only trading like, 2 contracts. If you're not on micros, go on micros. I don't suggest anyone trading 1 or 2, on the regular Nasdaq symbol to trade like even 1 contract on this. I suggest that trader go to micros, because on micros, it's 10. The equivalent of 1 here is 10 on micros. So if you would have, and you'll see where my order is right now. Okay, that's where my order is right now of the last remaining one contract from where I had the 2 runners left from here and added the 28 here. That's the last one. Well, it's up, 12,000. If you had 10 micros on, one standard here, but 10 micros, well, you'd be up 120. Or sorry, 1,200. If you had 1 micro, that's $120. Just move the zeros. That's all you're going to do. So when I show you these and my trades, if they're bigger, because sometimes I'll trade on the micros. I took one on the Russell yesterday and it was on the micros. So I only did like 10. So just move the decimal place over. There is nothing wrong with having a runner that's up $120. Nothing wrong with that. If you're looking at, you're getting in these, you got in one of these entries and you put on, you're on, MNQ, and you put on 10 and you closed out everything but 1 and your runner's up 120, that's fine. A runner up 120 today, let's say it closed out today, and you get 3 or 4 of those month, turn into what? 5, 6, 7, 800, maybe 1,000 a month in a bonus check. Remember, that's a bonus. So I do recommend trying to ride it. So back to the trade. So I was up 30. I was in 30. Negative for a while, pulled back, didn't close any. Negative for a while, almost back to where it was. I held. Line still there. Okay. Negative. Back to break. Oh, not even back to break even here. Here I was in the positive a little on the 28 and the 2 bonus. Back in negative. And then it finally broke. So over here, it broke through. This next candle broke through here. But it was nothing more than right there. So I didn't close. I held. I wasn't up much. There's my entry price. Right there, there's where I'm in here. Okay. So again, not up much. Only on this, and I kind of jumped the gun on it. I didn't wait for a candle to close. But because I sat in the negative so stinking long on this trade, when it pushed down here, I went ahead and closed. I closed out 25 of the 28 I added. I just did, because Nasdaq is wicked. It could have very well shot, turned right there at this low and then shot back up. I was just tired of being in the negative on that trade. That's why I closed. It was a whole mental breakdown. Because you look now, if you look now, you're going, well, why didn't you wait for this one? This? What did this test right here? Well, you guys have heard me say this before. Inside bottom. Perfect test. If you guys don't mark these, I suggest marking them. The inside tops and bottom. That's all it is. There's nothing, there is no rocket science to this right here. So don't think there's any more than what I'm showing you. You don't have to go out and research it, nothing. Stay on your 3-minute time frame. You're marking the high of a candle or 2 or 3, like in here. But when you start marking the inside tops and bottoms, you'll get this. Okay, let's say that's the inside of the top. Really, it's more like here. I mean, we can see that now. But a turning point, you get a turning point. It's not as clear when they're gradual like this. Where should I actually mark it? It is now, because I can see the bounces. When it's happening, it's not as clear. This one's clear. It came down, 3-minute candles, green candle up, back over this high of this candle. Well, guess what? That's a turning point. Before these candles even print, that's a turning point. Mark that. And you can mark the low. You're going to mark both levels. But I recommend marking these. I like to go ahead and label these. If you don't have chart templates, Just go in and you're going to write inside top. And I don't think I do have on here. No, I don't have inside tops or bottoms, but come in and just type it in. So inside bottom, save it as a template. Guys, you'll end up having a lot of templates if you're doing it right. Because I can mark that 3 minute inside bottom, 3 minute inside top. I don't mark them on the larger time frames normally. So that is our inside bottom. You would have the reverse up here for the top. But I recommend marking that. Look at where it pulled down, green candle up, boom, mark that inside of that turn. It's the inside of the turning point. That is all it is. Again, there is no rocket science. There's no, well, the candle has to be a certain height or there is nothing. That's how simple adding that is. Okay. So you can add that to your confirmation. But why do I recommend marking those? Well, look, if you marked an inside top here, bam, bam, it hit twice. You marked the inside bottom here. What happened over here? It hit twice. Okay, why did I pull profit where I did over here? It was at the inside bottom. That's why. Okay, so if you're not, definitely do it. It's easy to do. On a 1 minute, I don't even suggest doing it because the 1 minute candles, I don't think anybody should be down there trading unless it's during news. You guys know my feeling on that. News only. Other than that, 3 minutes should be the lowest you go. So back to the trade. So I closed 25 there because that was my goal with that, putting on the 28. Now I'm up to 30 and I closed out 25. I closed out 25 of the 28 I put on here, leaving 3 runners. I already had 2, and that with these 3 left on after I closed here, that left 5 runners on. And where did my candle close? It closed up. So that was a total price reaction to me, getting out, closing 25, because it came down here. Right to that low. And I had as you see, it closed right to that, went right to that price point. Didn't close there, but it shot down there. Boom. I'm like, I'm out. It was a total price reaction trade or exit. Was it with my rules? Nah. I mean, I got out of that because 1, look how long I sat in the negative. I even went positive here. So over here, my thought process was it's Nasdaq and it is probably not going to get, there's nothing that indicates that it is going to keep going further. It hit this price point. I'm closing some out. I was just sick of being in the negative on the 28 I added. Okay. So now I had 5 on, and then of course it drops. Now, don't kick yourself out of missing profit. I never kick myself out of missing out on profit. Okay. You just can't. You'll end up leaving trades on that you shouldn't leave on, and then taking a lot of losing trades. So I will never kick myself for closing a trade. Do I look back and say, I didn't close at the best spot? Yeah, I know I didn't close at the best spot. The next candle here, that next candle, this 3 minute candle told me, haha, you closed at the wrong spot. Okay. Yeah. That's all I need to say about that. I mean, it's just forget it and move on. That's all you can do. And I think you need to, a lot of people kick themselves even on losing trades. Something you have to remember is It's like anything else. You'll get in a trade, you'll lose a trade, brush it off, learn from it, brush it off. The next trade is going to be different. Every trade is not the same. Every trade will never be the same. You'll start seeing commonalities in the trade, like your entries, better entry there than here, stuff like that. Learn from that. And what did I learn here? I'll stick to my criteria, on adding there. I jumped the gun. So sometimes I've done that. I've done that before. It's not the first time I've done that, where I've added on a pullback like that. But sometimes it just pulls deeper, and I'm in a negative on what I added. Other times it turns right there and keeps going and goes back down. So I don't know. I don't keep stats on that. I just know that sometimes it'll hit like that. I can add in, it'll go. Other times it won't. So what's my best option? Stick to the criteria, wait for the break, the test, red candle, break of support, and then get in. Better entry. And let me show you something else. If I would have got in here positive for a while, I would have closed out partial, part of that 28. I would have closed out partial, but left my stop. And then through this, yeah, that goes in the negative a little bit. That goes in the negative a little bit. But where's my mind? My mind is okay with it all. Okay, when I got in here and sat through this pullback, I mean, I'm okay with it. But are you happy with it? No. I'm okay with it. But are you really happy with it? No. If I'd have got in here and it pulled down and I closed partial, let's say I would have, put the 28 on, closed out even just 20 or 25, left my stop, and it goes back here. I'm in the negative for a little bit. Let's say I closed out 25 and I only had 3 of the bonus on. I'd be in the negative on three lots. Is my mind okay with that? Yes. Am I happy with that? Yes. See, there's the big difference right there. Is once you close partial, you can leave your stop where it is, give it room to breathe, and you should be okay with it pulling back and hitting your stop. That's something you have to get used to. Everybody's different. But if you're going to leave runners on, if you leave your runner where it is, and let's say you did enter there, and you had your stop up above the high, okay, you entered there, stop up here, above this high, okay, you closed out. Let's say you just put, I don't care, guys, 3 micros, 10 micros, whatever. Let's just say it's 3. You close out 2, you leave your stop up here. You have 1 micro on. It goes back here. You're in the negative for a little bit, even over here, but it never hits your stop. Are you okay with it being in the negative for a while? That's something you have to get used to if you're going to try and do runners. Because as we've seen, if you pulled your stop to break even, you got stopped out and had to get back in. So with a runner, you fully have to say in the beginning of the trade, when you take the trade, I'm going to get in with whatever, 2 micros. I'm going to close 1 out and leave my stop where it is. Your 1 you close out should cover where your stop is. Okay. And the 1 you close out should cover if you take a loss, if it goes back to your stop. That's what the runners do. Okay. Or the close partial. Close partial should cover your runners. So you put on 2, close 1. Put on 10, close 8. Leave your stop. You're trying to build a runner. You're trying to get a runner. So again, better price entry there. Stop up here. Never get closed out. So it popped here. I knew right away that candle. I kind of jumped the gun dropping out. I'm okay with that. You just have to brush it off. There's nothing you can do about it. I can't go back in time and say, okay, let's rewind 3 minutes back, and I'm not going to close a 25 out. I want to do that. Call the broker and tell them what you want to do. Can you rewind this about 3 minutes? I accidentally closed out 25 contracts. So I'd like to put those back on. I mean, you just can't do it. So again, look at what you did. Oops, I closed out. Why? I knew why I did it. Why I did it was because it had hit here, and I thought, I mean, look at the pullback here. So after it came down to make this swing low, it pulled clear back here. I didn't want to sit through that again. That was it. That was why I closed there. It came down. I closed purely off of price, saying that's I'm done sitting in the negative on the 28 contracts I added. I'm just done with it, because just like this swing up, could you see that after that green candle just keep going up? Yeah. So that's why I closed. Done with it being negative. I don't want any more. Closed out the 25. Made a little bit on it because it was down here when I closed. Not much, because I got in over here. Came down again. You brushed it off. 3 minutes ago, we brushed off what we closed. Now we have to focus on what's left. And what I had left was, what did I have left? Because I had 5. I had 2 from the original, 3 from the 28 here, 5 on. It pulls down where? To the inside top, the inside of that. Why do we mark the inside tops and bottoms? Because in order to see a lower high form, it typically turns at an inside top or bottom. So as you look here, this is an inside top. Hopefully it saved that. Where's it at? Well, I don't have an inside bottom. We'll change this to top, guys. All right, so this is an inside top that we're marking. And we can see that now. And I'm going to pull off this support and resistance level. So, and you might not have had it marked here. I mean, you might have marked it here, something like that. But again, this is a high. This right here is a high. Okay, it's a swing high. Pulled up, turned, pulled down. Swing high, mark the inside of that. Because in order to get, what are we looking for in a bearish market? So far, we're in short. We'd like it to continue short. In order for it to continue bearish, it has to make lower lows and lower highs. Well, if this move here pulled up here, say to those wicks, is that a lower high? No, it's not. I mean, that's not a lower high. It'd be like a double top. But if it turns at the inside of this turn, does that make a lower high? It does. Okay. Same with over here. It turned twice, made kind of a double bottom here at the inside of this move. That's why you mark them. Okay. So I closed out when it hit the inside bottom, I was ready to close. The candle was red. I closed somewhere in there. I can't remember the exact. I mean, there's the price it's showing right there. 525. So sorry, 80.25. It was there. It was right in there. So it was when it hit the inside bottom. That's when I closed. So right when it hit. Closed off 3. Pulled back up. What did it basically test here? Test this low. I mean, it tests it. Test that as resistance. Held up. Pulled back down. I went ahead and closed one more because it pulled back down to that inside bottom. I said, okay, I'm done. I'm out. I'm closing one more. And I had one left. That's the one you see. So basically at that point, all I can do is manage my stop. Okay. So as you can imagine, the stop came down. As it pushed down, the stop came down to above these lows. or highs, I mean, stop comes down. Still in here when it pulls up in here. I don't pull my stops aggressive. So I like to give it room. Never pull your stop to a wick or candle point. Never. That's just asking for trouble. Look over here. I mean, if you put on a short here and it moved down, you close partial, and let's say your stop was here and you moved it right to that candle point, you were stopped out right there, and it continued on. So never, ever, ever put it at a price point of a candle. Never. Always give it room. I like to go back to the previous. Let's go back to this high. Let's give it a little room to breathe. Because this could have still wicked up a higher. So by having your stop above the previous high, not the current high, you stay in. Moves down. Where's our stop? We don't move our stop when this turn happened. Stop's still above here. It pulls down. When it makes this turn, we don't know what it's going to do. So at the point where our candles are here, we don't do anything with their stop. We need a price break, an extension. What do we need it to break? We need it to break the low. Okay. So it has to break the low. We need that push beyond this low. Okay. So once this broke through here, and only then when it breaks this low, can you move your stop above here and leave it? It swings down, pulls back. Only when it breaks the low here, so right in here, could you possibly think of moving your stop? That's it. That's how you want to move your stops. So long story short, because I'm not going to walk you through all this, but this is the one runner. After all this, and this was what? 2 o'clock, around 2 o'clock yesterday. So this last one was closed at almost 2 o'clock. It was like 3 minutes before 2. It's where that last one was closed. So this was a trade again that was put on yesterday, and the runner's still on. And the runner's still on. And now you're just stuck managing the stop. This right here, if you had your stop at the, I don't care if you pick the, remember, don't pick the candle top. So this move right here broke this low. Great. Boop, pulled down, broke that low, and then pulled back to test this high. If you had your stop right at that candle top, you were taken out before it continued to move short. If you gave it some room, it depends on how much room you gave it. If you were lucky enough, if you barely gave it room, you're going to be that trader that says, oh man, I was taken out just barely, just by one tick. I was taken out by 1 point, 1 tick, just barely hit my stop, and then continue moving in my direction. So I don't want to ever be that trader. I don't want those words to come out of my mouth, ever. And I know you guys have either heard people say it. I hear people all the time say it. I've got a local, well, a couple locals, but I've got a local that trades. I hear him say that all the time. But Butch, I was just taken out, and then it moved in my direction. I picked the right direction. I hear this all the time. A couple times a week out of him, I hear it, where it's like, I got in short. I was in the right direction. Did you close partial? No, I don't do that yet. Okay, fine. And he's trading 10 accounts. So on 10 accounts, he gets in, it goes enough where he can close partial. There's your daily bread, your daily goal, your profit, your $200-$300 a day. For him across 10 accounts, if that's a $200 per trade, one trade at 200, that's $2,000 for a day, and he won't close partial. He refuses to. I've been trying to get him for last year. So what have I been sending him today? I've been sending him the Nasdaq trades on the runners. I've been trying to get him to do runners, and he won't do the runners, refuses. But he's got the account accounts to do it in. So again, give it room. I don't want to hear those words ever come out of my mouth, because that's what I'd be saying if I just barely had my stop above that high. So if you got in, I'm saying if you got in on this red candle, took it, and you put your stop above the current high, just that, you're either going to be the trader that puts it there. I don't. You're going to say, man, it just moved a couple ticks and kept going without me. I was trying to get back in. Okay. You put it barely above. Again, you're a trader that says, man, I was just taken out. I picked the right direction, refused to close partials, and when it pulled back, I got stopped out only for it to move. Or as it moved down, you pulled your stop to break even, and then you were stopped out earlier. Okay. At no loss. Okay. But you can see that you could erode all of this. So where's my high? Well, if this is the current situation, if I'm getting in on this red candle, that's the current high it's making. Where my stop's above this one, and not to the point. Never right there to the tick. I got to give it room. So again, comes back up, your stop's there, pulls down, pulls back up, turns where? Well, it turned around that low. I mean, you can make sense of all of it after the fact. So it turned right here. We don't move our stop. I would move it here. After you get a couple red candles here, you could say, okay, I think that's forming a high. It's lower than this one. I will move my stop down above that last one. I always go one back from the current one. Now we need an extension. We need it to do what? Well, before I move my stop above here, I want to see it break the low. Once it breaks the low, I don't need to wait for it to pull back. I just need it to break this low. I need an extension of this move. Right now it's pulled back. I need an extension. This right here, an aggressive trader might do that, because that right there is around the inside of this bottom. So an aggressive trader might move their stop there. I like to wait for it to pass through. And if you notice what day this is last night. Okay. Now I'm still in it from yesterday. You can hold trades over. At that point, when it extends past this low, let's move our stop. You can move your stop. And guys, it just kept going and going and going. I won't bore you with the whole thing. Going. There's where my stop is now. Anyone know what price the order was at? Way up there. 26.30.50. That's where I've moved my stop today. And yes, I left my stop. This right here, I can guarantee you almost everybody's out on this pullback right here. Because if you're moving your stop according to those highs and lows, you might have even got stopped out here. But again, if you went back, and it depends, here's an extension. Okay, here's that extension. Let me draw one in there. Your stop would have been above, like way up there. So your stop would have been up at the high of the chart here. Okay, so let's say your stop was up here, and then it extended past this extension, past the low. There's your stop, because here's the new kind of high. And then when it extends right here past this low, you're going to move your stop here. I'm still giving it lots of room to breathe. So this is an extension. You don't move your stop to the current high, because remember, these aren't counted. I don't count these as highs, Because why? I don't have an extension past the low. The low's here. So this is how you got to kind of make sense of it. A lot of traders say, well, those are lower lows. And they are lower lows on the small time frame. But when you're looking at the grand scheme of things, you need it to break this low before I ever look for a lower high. So it pulls down, makes a low, pulls back up. Okay. It pulls back down. I say, okay, that looks like a lower high, but it is not enough reason to move my stop. I need to let structure continue. Let the structure continue to play out. It pulls down here. So it pulls down here. Now our high was up here, back there. And then when this one came, okay, we're looking, because remember, this is the current high. It pulls down, pulls back. I say, okay, possible high there. If you want to get aggressive, you can move to this, but I like to wait for a break of support. Break of structure, break of support. But we're looking for a break of support to say, okay, the market's continuing short. So again, I'm up there. It pushes. Boom, it pushes past. Once it breaks, I don't have to wait. Once price breaks below this price right here, then I know it's pushing lower. So that's what I want. I want it to push lower to say this is a lower high. Well, then I'm going to move my stop here above this high. I like to, again, give it room. And then even if you moved it here, okay, that would be the current high, not these little ones. We're not looking at these. We're choosing to ignore those because why? We're looking for it to make a lower low. Lower high, we want a lower low. Makes a lower low. Then it pulls back up and breaks through support. Then it pulls back down, pulls back up, makes a higher. Looks like it's going to be a higher low. Low, higher low, what does that mean? Well, that means structure's building up in the opposite direction. Overall trend's still down. Now you notice I don't have trend lines on these because remember, the trend lines will get broke easily by even sideways movement. I don't remember who it was. So one of the trades, it was platinum, which I'll show later. But in the platinum trade, it moved sideways through a down trend line. I did close out part of it. You'll see that later. I'll do that. I'll take like a 20-minute break after this and do that one. You will see where I closed out part of my runners. I had runners on short, closed out part of them because a down trend line was broke. But I didn't close it all and didn't get in long because a trend line's broke does not give you enough reason. You have to wait for structure to set up. Okay. So it pulls back up to test what? This high. Again, that's why you never move right to the tick. Pulls back up, tests that, comes back down. Okay. Only on an extension past this low do you move your stop. So my stop is hanging up there for quite some time. All these candles, all this move down. I'm not moving my stop. Once it breaks this low, I guess I could be moving a low like that. Again, we would have had a low here. We'll color this one red. Yeah, we'll color yellow. That's my low. Low, high, low, high. We're playing the low, high game. All right. And I know it's kind of crooked. All right. So again, we're waiting on that low to be broke. And only when that low is broke do we consider moving our stop. So it moves down, breaks it, tests it. This is something you have to have on your rules when you're moving your stop. It pulls down to break that. Again, it's an extension of the move. It's an extended push. Do you move your stop? Okay. Pulls back up, tests that level. It should be no surprise what the stuff does. When you guys are using combination of trend lines and support and resistance levels, it should be it shouldn't, trading in these moves should not catch you by surprise. I mean, that's a perfect bounce. If you weren't in a trade, that would have been a good entry. It's already been moving down. It moved down yesterday. It's been moving down since 6 o'clock last night. Downward move, pull back, downward move, push through support, pulled back, test support. What would you have had there? I don't know. Maybe a retracement line. Breaks the retracement line, pulls back, tests the backside of the trend line. You're either getting in there. If you're waiting on it to retrace further, it just never does. So it depends on, but trading in the overall trend, and I know you guys have heard the trend's your friend. Some people say, I don't like doing that. That guy I'm talking about, he trades against the trend. I showed you guys the other day, Nasdaq was long all day long. And we were in it all day long since like 10:30 in the morning. This was Monday. So Monday at 10:30 in the morning, took it long. It was long all day, and he got in it short. When I went to the coffee house, he's like, oh yeah, I got a little $100 trade on it. He tried to trade the retracement when it pulled back, trying to pick the top and bottom, trying to say that's as high as it's going to go. Well, he got in it. Luckily, I think he moved his break even, got his little bit, but he traded against the whole stinking day was long. Just why do it? Why trade against it? So again, yesterday was short all day. Then, here's last night. Well, we have a move short, pulls back, move short, break support, retracement line, another entry to get in. If you wait, now you're either getting in on one of those red candles. If not, and you're waiting on it to pull back, it just doesn't pull back. Okay. You guys know I don't like taking trend line breaks, but I have mentioned several times, if you do take a trend line break, what are we going to do? If you normally trade with, say, 10 contracts, you're not going to put 10 contracts on. You're going to go in lighter, because the better place to get in is when it pulls back, the better price. It just doesn't do it. So, and I've mentioned that, and it's on my checklist. You guys that have my checklist out there, I believe it still says that on there. I'm going to look real quick, but I believe it still says on there that if you want to get in on that, look at my master trade sheet. It sure does. So what is this kind of a trade? Well, 50% for wanting to go short. You're going to go short. It retraced back to test what? Well, retraced back to test that level. You put you up to 60. It retraced back. Well, really, it's already at 70 because it broke the trend line. So 70% reason to take trade. Let's say you only want 100. I really only want to take 100. But are you willing to take a risk on a 70, knowing that it may only pull back to this level? If you are, go in light. Now, it actually says to place a protective trade. Protective trade is just a pending order. Pending order because you're waiting on it to pull back. If it doesn't pull back, the pending order is going to put you in. And you're at 70%. 50, 60, 70, red candle, technically 80. As long as you're getting in on a red candle. So again, that's another entry. But you're trading with the trend. Okay, that's the point I think everybody should do. Let's trade with the trend. So again, pulls down, pulls back. When it goes down and breaks now this low, when it breaks that, what am I doing? I'm going to move my stop. You can move it down in here somewhere. You can leave it up here. You can do what you want because it's your runner. The closer you move your stop, the more likely you're going to get stopped out on one of the larger pullbacks. I do Yeah. On the, I like the 3 minute. I've settled on that one because I use trades of 15. You miss all, you don't see all this back and forth. Sometimes it's better not even look at this stuff. And then, but you do catch nice bounces on the 3. And you guys can see this one right here too. So again, it pushes back, breaks the low, you can move your stop. Now, depending on where you move your stop, somebody's going to have it, still off of this high and put their stop there. Someone else may move it down here. This is something that you guys have to decide how far you're going to trail your stop. There's 3 different possible prices to put your stop at. I can't answer that for you because right now we have a runner on, one runner from yesterday that's still making us money. Eventually, every one of these people will be stopped out. Eventually, every one of these people where their stops are will be stopped out because they're all trailing. I've never thought about not doing that. I'm not going to label them, but we got stop 1, 2, and 3. Let's adjust them all down. So pulls back. So it breaks the low, pulls back. Nice bounce there. We say, okay, we need to break that little teeny low there. And it does. It goes through and just shoots down. So as it pulls down, everybody's probably moving their stops. This guy's moving his here, saying, okay, if you want to make sense of this, again, this is what we're doing. We're analyzing the moves as it moves. We're making sense of why we're moving our stop. We don't just scale our stop down. We're not on the 1 minute time frame trading the news where you're just moving. You're constantly like, you keep your mouse on the stop button and you just keep moving your stop as it trails. That's not what we're doing. We're watching the bounces. That's why we're on a 3. So as we get a push, we have time to sit there and go, okay, where am I moving my stop? So the guy that keeps his real tight is here, off of this little bounce. The second guy, trader 2, is here off of that high. I'm back here somewhere. And I don't remember, guys. I don't have them marked. I do on platinum. I'll show you that later. I don't have it marked. But I like to give it a lot of room for the bigger pullbacks, because the bigger the moves, the stronger the moves, guess what you're going to get? You're going to get bigger, stronger pullbacks. Okay? So that's just something you'll get used to seeing over time that you have to get used to watching. Okay, so it pulls down here, pulls up to make a high, and then pulls back down. So when it pulls back down to that price point, are you moving your stop? Again, are you moving your stop off the current high? If you're moving the stop off the current high, you're here. If you're moving your stop 2 highs back, you're here. 3 highs back, you're somewhere in here. You're either saying that's a high that I'm off to my left, or this is the high you want to stay off of. But ultimately, where am I keeping my stop? By keeping it here. This low. This low, which was this high's bounce, I'm giving it room to get back to that, because I just know and have seen the big retracements. So if you want to make the big runners, you got to give room for the big retracements, unfortunately. All right. It just, you have to push down. Well, so again, we're not calling this a high. Remember, it pulls down, makes a low, pulls back, turns. So we're in a high formation. It's making a high, made a high. What do we need to happen? We need it to break support before we call this a set high. Like right now we say, yep, it's a high. I want to see it break support before we move our stop. So it breaks support here and then starts pulling back. So it depends on what trader you are. Again, the guy pulling his stop tight is more than likely going to call this a high in here. Yep, I'm pulling there. Someone else is moving a high here. This guy right here, are you keeping it there? Or are you moving it tight? That's the choice this guy has to make out here. Is he moving it tight or not? Is he moving it like that? Keeping this low, which it bounced right here, there. Is it worth it to move it that tight when you're already here? You're not that far. I'm not looking to lock in nickels. I don't know how else to say this. I've never phrased this. But again, moving the stop, not looking to make nickels if I can be down here later in my trade and making like dollars. Okay? Because that right there looks like a huge price level that I need to be aware of. And I stayed, that's, again, I don't have my exact price. So evidently I was above here because I'm still in it. So I don't know. It's probably somewhere up in there. But again, it's the huge swings that I'm watching. Huge downward move, huge pullback, huge downward move. If I move it here, I'm acknowledging that this was not actually a huge downward move for support. When it was huge downward move, this price supported that. If I move my stop there, I'm saying this is really a big price point I need to be aware of. And it's just not. It's a price point to be aware of because it pulled here, came back and hit that and broke it and kind of retested it. But if you look at the grand scheme of things, if you look at the whole moves, is this right here, if you're just looking at this little square piece of time, is this a support level that might hold up long term? I didn't think so. So that's why my stop was kept up. I think it was above this high right here, guys. I believe so. It was either there or above this one. It was somewhere around there. I'll try and mark. I just don't mark all my charts because then I get all these little things everywhere. I get those things everywhere. And then when I zoom out to a 1 hour or 4 hour chart, there's just too much on there. Looks cluttered. So we already know, as you can see, that this guy was taken out here, which is okay. He still made money on his runner. Where did he get in? He got in somewhere up around there, above me maybe. Remember, if you took the entry I took Wednesday morning, then your entry was even above that. This is after I added 28. Remember, if you waited on that retracement line to break that we talked about earlier, get in on a red candle, well, you were even better at that price. So even the guy that got out here made a lot of money on the runner. What price is that? You guys can do the math. I'll give you the numbers. I'm not going to sit and do the math. So it's 20,630.50. 20,630.50. That's my price. You guys would have been in better than that. Okay, if you waited, if you got in when I got in early, or if you waited on that retracement break and pull back to test resistance, red candle when it rounded over, red candle broke support, that was at 100% trade. That was a better price than this. So even if you just go off these numbers, 20,630.50, just run those. The guy here that trails his stop aggressively, he got stopped out at 20,328.50. That's where he got stopped out at. I think that's a good runner. This guy here, he got stopped out at 20,359.50. He was giving it room. I can't fault that trader for giving room. Still had a good trade. Still had a good runner. Did this guy here, trader 2, make as much as trader 1 on his runner? No, he didn't. Because he lost back this extra over what this guy did. So did he make as much on the runner? No, he did not. But he gives it more room for the times where it just, maybe it would have turned in here, took this guy out, and then kept going short here. Well, then this guy is going to make more. So again, you have to decide that. That goes along with your risk tolerance. I say this. If you're in a winning trade, if you get in a winning trade, and I don't care if it's 3 micros, 2 micros, if you're in a winning trade, and I'm going to challenge you guys to even try this. For those that trade multiple instruments, because it's kind of hard to do if you only trade one thing. So let's say you trade NQ and you got in that original entry I got in, or the other one where it broke trend line on 100% entry. You put on two contracts. Close one at partial, leave your stop, and let it ride. Don't even move your stop. Just don't move it. We've had things trend for days. And just keep in mind, the tighter you keep your stop, I would rather still be in a trade. This guy would too. This guy would have rather been in the trade. If it would have just dropped and kept going, he'd love it. This guy, he's trailing the stop tight. He's used to getting stopped out. If you're trailing your stop tight, you're used to that. Okay, but it's part of your trade plan. So you have to decide what level you're going to keep your stop at, what type of trader you are. Again, I know we're on the 3-minute time frame, but I like to ignore the smaller bounces, okay, versus the bigger bounce. Like in here, big bounce. In here, big bounce. You're kind of, and the only way to do that is typically to move out to a higher time frame. So I'm on a 3-minute time frame. I have not been watching this today on a 3-minute time frame. I have it on a 1 hour is where I've been watching it. There's no need for me to sit and watch it on a 3-minute time frame. I got my stop where I put it. I made that decision and I'm letting it go in case it continues down tonight and then through the Asian session and then tomorrow. Tomorrow's Friday. So I might make a decision to move my stop a little tonight or tomorrow. We have non-farm Friday tomorrow. Wouldn't you love to have some trades on and it continue in the direction you're in for non-farm? Now, those that are trading with funded brokers, some of them will let you hold through news. A lot of them will not let you trade news. They will not let you straddle news. That's a no-no anyways. I used to do that, but it's a no-no. And the funded brokers won't, because they know you put on a trade long and short. So just don't do it. Some brokers, I forget who, I think it's, I don't know, guys. I'd be quoting wrong if I quoted. But I know one of them like 2 minutes before news, 2 minutes after, you can't place a trade. Well, if you're in a trade, like I'm in Nasdaq short now, let's say tomorrow it comes up to non-farm and non-farm just blows. What am I up now? All right, we're up 11. So let's say non-farm just tanks. It just shoots short. And then I'm up 50,000 all of a sudden. If it was in a funded, now that wouldn't be in a funded account, but if it wasn't a funded account, or even if not, can the broker come back and say you traded news? Well, they can't. I've been in this thing since yesterday. They cannot come back and say, well, Butch, we're going to have to just, we're not paying you that extra amount. We'll pay you the, whatever I'm up now, 12,000. We're not going to pay you the additional 30, 40, 50, whatever. because, it was a news trade. It's like, no, can you look back at my entry? Sorry, but that's one runner. My main profit, and can I show them a trading plan? 100%. I mean, runners are my life, right? So maybe I should make a t-shirt up, runners for life. But I can go back and say, no, they can look and see that, man, this guy got in 2 days before news. How was he right? I don't know that I'm going to be right. I just have a runner on. And it just so happens that if it goes short tomorrow and my runner's short, which it is now, this is good fortune. I mean, I just held a runner and the news happened to come out and move in my direction. Do I know if it is? No. Can I guess? I mean, I could take a coin and flip it. Okay. We don't know what news is going to do or what the reaction is going to be. Okay. You can have as many things lined up to tell you what you want to hear. Do I want non-farm to come out tomorrow and push this short? Oh yeah. I would love it. Love if non-farm comes out tomorrow and push it short. Is it going to happen? That remains to be seen. Will I be happy if it does? Yep. Will I be sad if it doesn't? Yeah, not really. I mean, it's going to be what it's going to be. Always. We're waiting on lows. So I happen to ride through this whole pullback, which is huge. But what am I ignoring? I'm ignoring the smaller waves, the smaller moves, even this smaller pullback. I mean, this is pretty decent sized pullback. But on the grand scheme of things, where we got in, it's a hefty pullback. But we should expect that, right? We should expect that. So the healthier the push down, especially a healthier, quicker push down, you'll get pullback. Push down. And down a little deeper. Pullback. Down, 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 down. That just looks all down. If you couldn't make any money in there, I don't know what happened. That just kept pushing. It was slow, gradual. A little bit of pullback there. But then a little bit of bigger pullback than this one. And then it pushes further. About the same pullback as this one. Sideways, push down to what? Hit the low. And then when it broke these highs in here, you have to say to yourself what? Because let's zoom in on that. I don't want to zoom in that high. Again, these highs right here, it broke that area. What did it do? Well, it came and even broke this high. That's definitely a higher high. And when it pulled back, where did it pull to? Almost to this high. Pull back. Where did it pull back? Reverse move. Somebody could have, this guy right here, trader one, probably took that long. And that's fine. Or he might have waited till it pulled back and bounced here at support. Maybe he had a line like this. Support resistance. Pulled back. Retracement. What is that? I mean, that's a good entry. That's a good entry to go long. I'm still short because I'm trying to ignore the smaller moves. Okay, the retracement. So it pulled up, pulled back down. You'd have a retracement line down. It's already broken highs. This move up had already broken these highs. So you'd say bearish formation, possibly forming. We already had a higher low back here. We're waiting for a pullback. We're waiting for a turn. As it pulls back down, couple candles. Let's try and draw a retracement line. You draw a retracement line. It breaks the retracement line. And boom, you're in long. You're going to close partial at the previous high or wait for it to get broke, extend and move, close partial, and then you're riding that. This trader that gets in on that more than likely has his stop here. He might have left it here. then moved it here. When you get an extension, pullback, another extension. I'm only going to do this trader. He pulls it here. So he pulls it above where he got in. He got in here, closed partial, wherever, either here or up here, moved to stop once it makes that extended move. That's the day trader. That's the scalper. That's the 3-minute entry. That's what we normally do. I didn't do that because I'm still in it short, going for something that I would love to see turn into a multiple day, week, or even a month trade runner. So in order to do this, though, on Nasdaq, I can't trade it in this account. I'm already in. So if I traded this long, it's going to close out my short. And that's not my goal on this. I bump it out to a 1 minute and then bump it out even to a 4. There's your sideways, and there he's taken out. That would have been a good trade. Okay. Once it pulls down here, what do we say to ourselves? Every time it breaks a low, we say new low. This red candle right here, it breaks that. It breaks that low. Breaks the low from over here. So when it pulls down, closes below it, what do we say? We say, again, forming a lower lower. Prepare to move or stop, if that's what we're going to do. But we're making a lower low, because you can't deny that this low is lower than that one. So we already know it's happening just by that red candle closing. It stays in there for a few candles, just testing that level of what? Support and resistance from over here. Support, support, resistance. I probably don't say it often enough. When you're looking at support and resistance levels, what we're looking for is old support becomes new resistance. That's how it was taught to me. Old support becomes new resistance. And if it holds up, then we're still bearish. Okay. Move down, extension down past the lows. You'll see where my stop is right now. Pulls back up, moves back down, breaks a 4-hour trend line I have on my chart. I'm not going to switch to 4 right now and see if it's, I believe, oh yeah. That's the current 4-hour trend line. So I even held through that. You guys know that as we draw trend lines and zones, sometimes they get broken. That's what happened here. It pulled right to that trend line. And I'm saying to myself, at this point in time right here, I'm saying it's pulling toward my 4-hour trend line. Fun might be over. And it has multiple touch points out there. But at that point, I'm like, okay, short might be over. But do we close our runner? You guys have heard me say, I don't close my runner just because it's getting near a trend line or zone, because you guys have seen it happen time and time again. What happens? Just like this. Trend line was broken. It didn't hold up. It was actually tested. Broke through, and it was tested as resistance. Again, this is an uptrend line. It's a support level. Held up as support here. Held up as support for a little bit here. That support was broken. It came back up and tested the old support level as a resistance level. Tested it, retest here. When it breaks it, it's a test of support. This, test of support, test of the trend line. So it's test of a support line, support level. That's a test, not a retest. That's the first time it got here. So many people call that first touch a retest. It is not. It is a test. The retest is over here, the second time. Same here when it broke it. So it broke support. Sorry, guys. If I mute my mic, it's because I need to get a drink of something. My cold coffee. So again, it tested the uptrend line. So it tested as support. When it retested, the retest, it failed to hold as support because it broke through. Then it came back up to test that as what? Let's test it as resistance now. Let's see if it'll hold up. Well, it held up. retest of the old support level. We want to see if it's going to hold up as resistance, and it does. It pulled down. Good push, good swing. Only at that point in time do you want to say that 4-hour line might not hold up after it's been tested or even retested. Sometimes it'll just hit it once. So that would be a time to move your stop. I'm not moving mine down right now. But that is a perfect example of why we hold the runners. Now, I just have to mention this. You guys know I'm big on trend lines. I trade trend lines all the time. I've been trading trend lines for forever. That would have been a line on your chart. There's no doubt about it. Push down, that'd be a line on your chart. Pushes down, moves over, down, moves over. So you draw the line, say off this high to this high. What did it do here? It broke through it, tested the back side, okay, and pulled up. That right here is not enough reason to bail. I like structure to build up. That does mean that I give back more when it turns than most other traders. It just does. So it tested the uptrend line, the backside of the down trade line, tests it. It does what? It moves up. Okay. Is it a higher high? Not at that point. It's just testing this high. Okay. Now, did a lot of people bail here? Yes. Again, you have to have this set up. It should be in your, I don't care what you call it. I just call it your strategy, your trade strategy, your trade rules. People call them playbooks. A buddy of mine, he does real estate, and I've helped him with real estate and traveled around with that. He was big on playbook. His word was playbook. It was just his playbook. I've seen other people use the word playbook too. It doesn't matter what you call it. Some people get out of their runners on the trend line break. I don't like doing that. I want to wait for structure to build up in the other direction. If it would have came down here and formed a low and went here, as soon as it breaks this, okay, because I drew the line here, that line would have been drawn off that point. As soon as it breaks that line, what do you say? We're making a higher high. I mean, you can't take it back. Again, when price breaks that line, it is technically already in the making of a higher high. This is what you say to yourself as you're trading. So at that point, I look and I say low, high, higher low, higher high. And then I want to see a pullback to test this level. At that point, I would get out of my short and get in long. I needed to come back to test this level. Give me a green candle. Do you see how much I'm giving up? So the trader that closes on a trend line break gets out here. I'm getting out up here somewhere after green candle. I might be getting out that price point. Okay. So there's a big difference in there. This is the one trader getting out. I'm getting out over here somewhere. Okay. I'm getting out this price level. They're getting out at this price level. So what's the better strategy? It depends. It depends on you. I like my strategy. I want to wait for structure to build up, because if it keeps going short, I want to stay in it. But that means that every time we see a trend line break and I wait for structure to build, I am losing or giving up more of my gains on my runner. Someone else that gets out right on a trend line break is capturing more of his gains, okay, on that trade. But is he in for the long haul? Is his runner, I don't know where he got in. Maybe he got in over there somewhere. But more than likely, you get in on something like this, close out partial, you're closing out your runner. So this is where, and you guys know, trend lines work. I've been using them forever. Trend lines work until they are broken. And once, if I would see this structure build up here, what would I do? Well, I would be drawing a trend line from that low to that low, or trade line from those two lows. That would be my, if it broke here and then we see a pullback and I'm looking for that green candle, that would be my new trade line. If I was trading solely based on the trend line and the build up after, okay, that would be an entry long. Well, it never does that. It absolutely never does that. Never goes higher than those highs. Okay. Let's scan on over. We're going to get here. That's where we're at now. So I'm still in the trade. It's below a 4-hour uptrend line, which not only held here. Remember this kind of a test, retest. It went down to make what? A lower low. The trader with a tight stop loss, which might have got back in, is down here. His stop loss down here somewhere. The next trader, his stop loss is down here right now. My stop is up here. Now I have to decide if I want to drag it down or not. And I think it's in a good position. I'm probably not going to sit through a huge pullback. We'll just have to see what the rest of today gives me on the trade. Ultimately, what am I watching for? This right here, this 4-hour uptrend line. Right now, we're in a test on it. If you drop back to a 1-hour time frame or 4-hour time frame, and watch the candles, because that's where I'm at. I'm watching it on the higher time frame now. I don't really care what it's doing on the 3-minute this time, because I'm not looking to get back in. I'm only at this point looking to move my stop loss, and that's it. That's all I want to do. And if this trade can pan out to stay on, again, I'm already in it. Okay. And it's pulled back some. I don't know what was I up, like 12 now? Right now it's like 10. So this is what you have to get used to riding. It's back and forth. And it doesn't matter. It doesn't get any better watching this except for time. I guess time heals all wounds. I'm going to pull out some corny stuff, I guess. So you'll watch this go up and down. You guys know from my Euro trade post, was it last week or week before? And that thing was, 8,000, 10,000, 9,000, 12,000, back to 10,000, then to 15,000, then back to 12,000. It just goes back and forth. Well, that's what I want to see. I mean, do I want to see it just keep going and going and going? That'd be great. If it just takes off and tanks, sure. Never pulls back, okay. And for 5 days goes short. Well, that'd be wonderful. But does the market move that way? Not ever, never. So we're going to ride the pullbacks. These numbers are something you have to get used to. Again, I have one runner and it's up 11,000 and it was just 10 something. And you know where it is now. Well, it was down here. So it would have been up what? About 12,000? Right now I'm at 11. So I've been up about 12, let's say, or 12.5. Could I have closed out there? Yeah, I can close out at 12. But why? If I'm on the right side of tomorrow. Now, if I'm on the wrong side of tomorrow, let's say I leave my stop here. Let's say it doesn't do anything. Stays right here the rest of the night. Let's say tomorrow, after non-farm, it just pulls up, hits my stop. Can I look back to today right now and say, well, I should have closed out at 12,000? Sure, you could do that. The only problem is that you're already in it, so why not stay in it? Okay. So I'm watching for that 4-hour uptrend line to break, and we'll see if that actually happens. But overall, you're already in a winning trade, so why not stay in that trade for the rest of the day and for tomorrow? I love being in these. How many times, guys? I don't keep track. I do have it on. Well, I do have that on my Google sheet where non-farm payroll. You should track that separate. I recommend tracking all news releases separate. So non-farm is tomorrow. Treat it as a separate strategy. Okay. Don't lump it in with your regular trades. It should be a separate strategy. It happens 12 times a year. I do recommend paper trading it. Do a demo trade on it. Guys, I recommend doing it for a year, demo, and then look back at your data. How successful were you? To me, here's to me. If I trade non-farm, now I've been doing it for years, so I already know what my stats are. If I trade non-farm, every month for 12 months, how many times do I suffer a loss? Look at that as a whole. How many times do you suffer loss? If it's 2 times out of 12, then look at your trade results. Are you making more money on that? So if you look back at non-farm, and I don't care, I'm just going to throw some numbers out there. But if you look back at non-farm and say, okay, last year I traded it. Let's just say you traded it the last 12 months. You traded it the last 12 months, demo. And when you've traded it, you've gotten into trades 15 minutes after non-farms come out, or an hour after non-farms come out. Most people try and wait it out. And you have to decide. Some traders do 15 minutes, some half hour, some 1 hour, some 2 hours. Some don't trade Friday, non-farm Friday at all. Okay. So I've seen one guy, this was 10 years ago. I don't know if he's still teaching it. I haven't been able to find him, but his whole trading philosophy was let's trade once a month. 1 day a month was his trading philosophy. And guess what it was on? Non-farm Friday. Let's just trade non-farm Friday. He's throwing on trades. And that's it. You're trading 1 day a month. I don't think anybody should do that. So especially that's not trading in my mind. You might as well flip a coin. I think they're straddling, which is highly, you're going to take 2 losses at once typically because the spreads widen. So you have to decide, do you wait 15 minutes, 30 minutes, an hour, or do you sit out for the day? I like to be in a trade already, even if that's so on non-farm. I like to be at the computer no later than 7 to look for an entry. 6:30, 7 o'clock. I like to be here at the desk and I'm looking for an entry if I'm not already in. I like to be in a trade at least an hour. I'd love to be in trades at least an hour before non-farm. That way, if there's a dispute with your broker, they can see what time you put the trade on. Oh, it was an hour before non-farm. You really weren't trading non-farm. You got in one direction. You were in short, trading with the trend. I had my criteria. Here's my checklist. Okay. If you ever have that battle with your broker, well, guess what's easy to do? If I have my piece of paper here and it's got my checklist, I can even shoot them a screenshot of that, because guess what? I have my entry criteria right there. It says the time I got in the trade was at 7:15 a.m. I got in short, trading with the trend, got in after a retracement pullback and a red candle. How can they argue with that? They can't, because your trade in the system matches that, your entry time. So can you imagine having to go back to the broker and proving why you took the trade early, that you weren't just jumping in because you thought it might go short? I mean, to me, that's pretty powerful. So track your trades. Anyways, guys, I hope you enjoyed. I'll be back. Probably going to take maybe a half-hour break, and then I'll come back in with platinum. Platinum I did have marked up and still do. of the let me look at it. All the trade where I added to my position. So platinum's a fun one because this one, that one I actually got in lightly, and then still same criteria and all. It's still on right now, and I'm hoping to ride it through too. So I'll take a break here, and then we'll come back with platinum in a little bit. So I hope you enjoyed this. I will see you soon.